All right, gang. Welcome. This is another buy high, sell low. I am Teddy, and I'm pumped to be here with you guys tonight. Another Wednesday night stream. We have a lot of good stuff to talk about, and I'm happy to announce that I'm not just raw dogging this one. I actually have a plan for what I'm going to talk about tonight. I plan to start with a good little trader psychology section. And then we're going to move into my FOMC trade, which if you guys were on Twitter, if you guys follow me on Twitter, which most of you probably do, my FOMC trade went nuts today. It's the same setup that I trade every single FOMC, and it's an ABC is what I call it, ABC setup. It went nuclear today. So we're going to talk about that. I'm going to talk a little bit about something volume-wise, behind the scenes of volume, bulls, bears, they're fighting, battling, blah, blah, blah. I'm going to talk about that. And then I'm going to do the same thing I do every week, which is my market analysis, SPY, what I think SPY technically is going to do over the next weeks, months, whatever it is. And then we'll do some individual stocks I like. So what am I seeing on the market? I do some FinViz screeners every single night. I do them on the weekends. What really stuck out to me? So that's kind of the plan for today. And on my screen right now, I do have Bitcoin. I was just rolling through some 5-minute charts, and Bitcoin is basically riding this 9 EMA like a horse. And so I put it up on my screen. We're going to see how long it can ride the 9 EMA. It's bounced off of it once, twice, 3 times, 4 times, and a 5th time basically 5-10 minutes ago this thing bounced off of it. So we'll check out Bitcoin as we go, 5-minute chart. And I'm also going to do some Bitcoin analysis down the line, a little bit of daily chart analysis on Bitcoin because I have strong opinions about it. But let's start off with the trader psychology section that I was kind of alluding to earlier. And I'm going to start with reading you guys a little section of one of the best books, Mastering the Trade by John Carter. And this section is called Why Do Traders Have to Blow Out an Account Before It All Sinks In? And I actually agree with that sentiment already. Before you even read this, before you even hear this, I do think most traders have to blow an account or blow most of an account before they start to get it, before things start to click. I do want to pause here, and I want to say just a warm welcome to everyone who's filing in. I see Barney in there. I see JB. I see Sam. I see Fernando. I see Joshua. Welcome, everybody. Hello. Hope you guys had a good day trading. And yeah, this is buy high, sell low. So why do traders need to fail? That's what this is going to be about. Why do traders need to blow an account before things finally start to click, before they finally start to get their feet under them and actually figure out the trading game? Because the trading game is so difficult. Why does it take such a strong negative thing, such a failure to move forward? So let's see what John Carter says, and then I'll give you guys my opinion about this. This is a few paragraphs long, so bear with me here, and if you need to go back and listen to this again, you can. So this is what it starts with. Trader psychology is one of those subjects that doesn't seem to matter until it really matters. Like when you're changing a flat tire, or when your 3-year-old daughter yells out in the middle of traffic, "No, Dad, I have to poop now." You think the issue will never arise, or it won't apply to you, or you'll figure it out before the moment of truth. However, that moment of truth tends to happen at the least convenient moment, typically when things are about to go from bad to much, much worse. It's one thing for your daughter to say she has to poop in the car, but it's a whole new ballgame when she actually cut one's loose. The term itself, trader psychology, inevitably gets thrown around with greater and greater frequency as a trader nears the goal of trading the market successfully. Because the closer the trader gets to becoming consistent, the more apparent it becomes that his greatest enemy is rarely the individual on the opposite side of the trade. Far more often, as is the case in so many aspects of life, our worst enemy is the person we look at in the mirror each morning. Unfortunately, most traders, myself included, never realize this until they blow an account. They say, "I didn't think that would happen to me. I didn't know that was going to happen to me. I never thought I would be in this position." Seasoned traders call that the price of tuition. The first psychological issue that traders find themselves butting up against is addiction. When people hear traders talking about addiction, they often think about gambling, an addiction to the rush of placing a trade, anticipating the thrill as a trader establishes a position and hopes that it goes her way and brings in a ton of cash. And yet all that pales in comparison to the addiction of being right or not being wrong. It drives human behavior into the realm of absurdity. I want to pause there real quick, guys. That's a big point. A lot of traders, before they find success, are addicted to just being right, are addicted to having a good play. They don't even care about the money that much. Deep down, a lot of them are just addicted to being validated by the market. Addicted to, I'm bullish on this, and then seeing it work out the way that you thought it would. Addicted to just getting that thrill of, damn, I was right. I am so fucking smart. That's what a lot of traders are addicted to, which isn't what most people would think. Like John Carter just said, most people would think they're addicted because gambling, blah, blah, blah. They like this, they like that. It's not as much that. It's more so the being right and being able to kind of boost your own ego. And we always say ego has to leave. Ego has to stay at the door when you come into the trading office. And so that's one of the reasons that a blow up has to occur. Your ego has to just get destroyed. And then you're going to build it up in certain ways. But for the most part, that beginner ego of, I just want to be right. I want to feel right. I want to get the thrill of charting something and then being right has to just get obliterated. So that's reason one why traders have to blow an account before they can find success, or why most traders have to blow an account before they can find success. Let's keep going here. For example, placing a trade that will make money as long as the market doesn't crash overnight is a reasonable setup and a reasonable assumption. Stops can be used. Risk can be assessed. In the morning of January 17th, 1995, an earthquake hit in Japan, causing its stock market to take a nosedive. One particular trader saw this unfolding, watched his losses mount, and started doubling and tripling up in order to recoup his position and make money on the trade by bringing down his average. When the bounce failed to materialize, the trader, named Nick Leeson, bolted out the door, leaving a note that said, "I'm sorry. This trade lost $1.3 billion and bankrupted Barings Bank." Although this is an extreme example, it happens every day around the world with much smaller accounts. Maybe 5,000 doesn't seem like much in comparison, but if that's your entire trading stake, losing that amount can be just as devastating as losing $1.3 billion. Okay, maybe not quite as devastating, but you get the idea. So there it is again, guys. A trader doubling down, not wanting to be wrong, and completely bankrupting a bank. A bank! So not only is it beginner traders, it's also people who do it professionally that sometimes fall victim to this. This is all going to tie in when we get to the end here. Let's keep going. In many facets of life having to do with careers, an addiction to being right is a strength. It forces us to work harder to meet our goals and to prove ourselves and to others that we can, in fact, accomplish what we've set out to do. It can cause us to view a potentially devastating setback as a mere learning experience. And onward we go, dusting ourselves off and getting back on the horse for another ride. It's like the movie Rocky each and every trading day. No one thought an uneducated but kind-hearted debt collector for a loan shark could get a shot at the World Heavyweight Championship. But he did, and he proved that everyone was wrong and showed everyone that he was right, and it was an awesome movie. It's a fantastic life lesson in persistence and following your dreams, but if you try that in trading, if you try holding on to a losing trade until it turns back into a winner just so you can prove that you're right, or just so you can prove that you're not wrong, you are going to get your ass handed to you. Maybe it won't happen on this current trade, maybe not the next one, but it will happen and it will lead to a blown up account. True, not many of us will ever bring down a bank, but wiping out your life savings is a very close second. Trading is the only profession that punishes tenacity by taking your money. Be tenacious in learning how to become a better trader, not in proving that you are right on this current trade. That's another fantastic point. This book is just a wealth of knowledge, guys. Mastering the Trade by John Carter. If you haven't read it, you have to. But that last line there, Be tenacious in learning how to become a better trader, not in proving that you are right on this current trade. I'm going to say it again. That's hitting me right now. Be tenacious in learning how to become a better trader, not in proving that you are right on this current trade. How fucking awesome is that? I think he's right in every single aspect. I think that's perfect. You don't need to be right on this current trade. You can take a small loss on this current trade, survive, advance, move on, learn something. Rather than trying to force yourself to be right, force yourself to become a better trader. Try to make yourself a better trader. Try to be a better trader. Try to determine what you need to do to become a better trader. Channel the energy that you feel while you're in a trade thinking, I need to be right. Refocus that energy into, what am I doing wrong? What could I do better? What needs to be better next time? I just love this whole entire thing that I'm reading, this excerpt. I'm going to continue here. But it's not just the human need to be right that makes trader psychology such a complex battle. It's that other power of the human mind, the power of rationalization. This is a topic that John Carter touched upon, but it's worth another quick look from a slightly different angle, which we're going to get into here. Rationalizing the events on your screen means rewriting the story of what's actually happening in a way that feels comfortable to you, that makes your position seem like the correct one. Things like, this trade isn't going to go against me for long, thinks Joe Trader. They aren't going to shake me out. And if it works out, Joe Trader over there is going to compliment himself for being a genius. He knew that it would work out, especially this trade. Call it a gut feeling. And of course, since it did work out, it just proves that his analysis was spot on. You know, he says, I think it's time for me to up my trading size on the next one. Rationalization gets really, really dangerous. A person can gloss over reality in nearly all areas of her life, reshaping her interpretations of events to put her in a favorable light and keeping that pristine image intact. After all, it's okay to ignore your kids when you're on the computer if you have very important things to do, or so goes the rationalization. None of us want to admit when we're being a shitty parent. In trading, however, at the end of the day, the result is right there on your profit and loss statement. No matter how right you persuaded yourself that you were, a loss took place. Think about that, guys. Every other aspect of your life, you can rationalize. Oh man, I was right. Oh man, I thought that, but then this happened. Oh man, this was working against me. Oh man, this happened. Oh dude, I would have had it if it wasn't for that. In trading, it doesn't matter. There's a bottom line. You made money or you lost money. If you lost money, something wrong happened. You made money, something good happened. It's your job to find out what those things are, and that's what's going to happen once you have to blow up an account. But let's finish this. We're on the last little bit here, so let's just power through, and then I'll kind of give you the spiel. No matter how right you persuaded yourself you were, a loss that was incurred when you were trying to prove yourself right is still a loss. And your story doesn't mean a thing to a neutral-minded market. The P&L is the great equalizer. It reveals who you really are, and in many instances, the picture is not pretty. Unfortunately, most people would rather do anything than confront themselves. Most people would rather do anything than confront themselves. Think about that. Most people would rather do anything than confront themselves. Their ideal image of who they are. It's not fun. Believe me. I thought I had much better qualities as him talking. I thought I had much better qualities as a person before I got into analyzing my trading personality. And this is why trading has such a high failure rate. Flaws explode onto the P&L. They must be addressed. Not just in theory, not just through a few notes in a trading journal, but in practice. On each and every trade. The game changed for me when I committed to becoming a better trader on each and every trade as opposed to rationalizing why I was right. Gonna read that one again. The game changed for me when I committed to becoming a better trader on each and every trade, as opposed to rationalizing why I was right on every trade. And that itself is why blowing up and failing is almost a requirement. Because a lot of times, if you don't blow up and fail, you can still rationalize. You can still say, oh, I'm only down this much. It can come back. Oh, I still have money in the account. I'm just going to hit a good one. I've just been, slowly declining. When I start figuring this out, it's going to come back up. You blow up. You completely go to zero. You have to confront yourself. You have to confront what you did wrong. You have to confront what you can do better. And it is a beautiful, beautiful moment when you actually do that analysis. I'll tell you guys that. I remember when I did it. I remember when I made a similar decision, not the same as John Carter. Not everyone's process is going to be the same. But when you commit to actually focusing on yourself, the issues that you're bringing into trading, and making sure that they don't impact your trading, you're going to see a huge upswing in everything. And confronting yourself is also when a lot of the growth begins, which John Carter is alluding to throughout this little passage here. He's saying, a lot of people, you can skate around the idea of, what am I doing wrong? Your brain doesn't want to be wrong. You want to be right. You can figure out ways to make yourself feel right. Once you cannot do that any longer is when the rubber meets the road. Once you completely smash your ego into shards, it's when you can start to rebuild it. It's when you can start to rebuild your strategy. It's when you know what you did wrong. So many things come when you fail. I mean, a lot of people are going to quit when they fail. A lot of people, they're going to have an account, they're going to blow it up, and they're going to quit immediately. That's okay. There's a reason a lot of people quit. It's because it's fucking hard to confront yourself. It's fucking hard to look at your trading completely unbiased and say, wow, I was bringing emotion into this, or I have a tendency to do this. But blowing an account, you have to do those things. You have to confront them, or else you're going to blow another one. Then you're going to blow another one. If you choose not to confront them and keep putting money in, that's insanity. Choosing to do the same thing over without changing anything. Failing, banging your head on the wall. You're not going to make it doing that. So there comes a point, you have to decide, am I going to step over this line into the area of actually looking deeper at this thing and taking ownership? Or am I just going to continue rationalizing these bad trades? Telling myself, the MMs stepped me out. I'm going to come back next time. I just need one good trade. And when you finally do step over that line, decide to confront your strategy and look a little deeper, that is when true growth is going to happen. So guys, we're going to be moving on here, but I just want to highlight again a few sentences from this John Carter excerpt here. The first one, let me scroll up here. Okay, first one here. Be tenacious in learning how to become a better trader, not in proving that you are right on this current trade. That is such a good quote. And then the second one is going to be that last sentence. The game changed for me when I committed to becoming a better trader on each and every trade, as opposed to rationalizing why I was right on every trade. Such a great quote as well. All right, I'm going to look into the chat here, see if we have anybody that wants to, ask questions or anything, and then I'm going to move into my FOMC trade, which I'm going to put that up on the screen while I'm talking here, and you guys can just kind of check this out, give it a good look, see if you guys see anything, see if you have any questions about it before I even start. And then I will get into breaking down this entire trade. This is SPY. This is the 5-minute chart. I trade on the 5-minute chart intraday. And this is the trade. That's the percentage. You guys can see I got up to 800% on that thing. It was a nuts trade. It was something I don't typically get this much of a banger, a crazy percentage like 800%. I don't normally get that. But I did today. So I'm going to break it down. Okay, we've got a question that says how to join Volume Camp. I'll be letting you guys know. Volume Camp is it's likely going to get pushed back towards mid-April here. I just got too much shit going on right now. It's probably going to be in, yeah, I would say mid-April, maybe early April if I can really get my stuff together here. But I'll let you guys know. I'll be tweeting about it, and there'll be a bunch of stuff on my Twitter about how to join Volume Camp. What do you use to trade SPY? So I do two things at once when I'm trading SPY during the day. I do options, usually 1 to 2 DTEs, and then I also do trade futures. I trade ES. So I'm getting kind of two different vehicles, one with those options and one with the futures, mostly because I traded options for a long time, and so I still have an account that I do trade options in, and then I have my futures account, and I kind of like both. So I just do both at the same time. I have multiple screens. I open one, and if I still have, the entry is still there, I will open the second position, and then I kind of manage them at the same time. Seeing a lot of names in here. I'm seeing Eric, I'm seeing Angela, I'm seeing Joey, I'm seeing Deli, I'm seeing Jules. Thank you all for being here. How many touches on the 9 EMA would you say is still valid strength? Honestly, as long as it's not so much how many reactions, it's more so what the reactions look like. So if we're touching the 9 EMA and it's a quick bounce, a strong bounce with a good candle on it, then there's still valid strength there. But if you're touching the 9 EMA and it's just barely riding on it, it's just barely touching it, the strength is probably not as strong as it was. It's probably weakening, and that would be a situation where you could potentially wait and see, or you could just kind of fade it and maybe not take that one. But for the most part, strong bullish candles are what I'm looking for. That's the reaction that tells me the strength rather than the number of taps on the 9 EMA. All right, let's get into this FOMC trade. So what we did here today is very, very simple. It is the ABC setup on FOMC, which, let me go get the graphic here. I want to make sure I have the OG graphic that I posted this morning. Here we go. Copying it. I'm going to paste it in here. This is the ABC move. I posted this morning, and I've traded a lot of FOMCs. I've traded over the past few years a ton of FOMCs, and this is what I consistently see happen a lot. We see the ABC move where the A move is real. So the first initial move after the announcement ends up being real. And then we get a B, a fake move, where it's faded and it's a slow move. And then it bounces off a support of some kind. And then we return to that real move, which is exactly what happened today. And if you guys can see, I have the A, B, and C moves all annotated here. The A move was right at the announcement, which was at, I believe it was it 2 o'clock Eastern? It was 2 o'clock Eastern. So 2 o'clock Eastern time, we had the announcement. And this thing popped from right about, 563 all the way to 564.30s by the end of the candle. That was my indication. That was kind of my ding, ding, ding. This is the real move. This is the A move. Because it was such a strong candle, it got above the 9 EMA and it had high volume. I expected it to have high volume because FOMC news is usually really, really significant. But when I saw that candle close like that, that was that's the A move. Now I need to wait for the B move. And the B move came about 5, 10, 15, 20, 25 minutes later, where we got this pullback to the 9 EMA. And I want you guys to really look at the volume here. I knew a couple of things. I knew that Powell's speech started at 2:30 Eastern time, and it was 2:25 Eastern time. I knew that we were pulling back on low volume to the 9 EMA. And I also knew that the B move is typically a fake move. So we had the A move, strong, decent volume. We had the B move, much lower volume to the 9 EMA, which is one of my bread and butter indicators. And we had Powell coming on in 5 minutes. So for me, it was a no-brainer, buy this B move. But the last thing I needed was, where do I buy this B move? I need to make sure I'm not buying this in a shitty area. I need to make sure I'm not going to get my ass stopped out. I need to make sure I'm not going to, completely get annihilated here. So where do I buy the B move? The first thing was that 9 EMA. Yellow line here. I'm a 9 EMA truther. I'm literally probably the biggest 9 EMA fan on Twitter. I don't think anyone posts about the 9 EMA as much as me. My wife gets jealous about the 9 EMA. My wife literally gets jealous about the 9 EMA. Not actually. I'm just busting her balls. But the 9 EMA, I love it. That was my first area to watch for the B move. My second one was this top right here. So I said in my Discord, 564 to 564.50 is going to be my buy zone for the B move. So let me get this drawn in here. 564 to 564.50 is my buy zone for the B move. I got lucky because that was basically the exact bottom of the B move. Powell came on, this thing ripped, and this thing held the 9 EMA all the way from about 564.50 all the way to 570.50. 570.50. 564.50 to 570.50. 6 whole dollars in 5, 10, 15, 20, 25, 30, 35, 40 minutes. $6. Absolutely insane move. It topped at like 850 to 900%. I can't remember exactly. I got a screenshot of 811%, and I ended up selling my calls at 700%. I scalped it like 3 times in there. I got like 50%. I don't remember if it was like 50 or 70% on the first 2 trades, and then I held some for longer, and I got all the way up to that 700%, 800, 850, 900%. I did send a little message. I was like, should I wait for 1,000 to sell to my Discord? And somebody said, hell no, get the fuck out of there. So I said no. I sold. I got out of there 700%, and then it did tank, which I was lucky. I did sell right at the right time. I do want to go over it one last time here just quickly. A move, strong volume here. B move, lesser volume. Came down to the 9 EMA. And came down to this previous resistance that I had marked. And it happened right before Powell starts talking. And the key part here, guys, I want to kind of reiterate this. There's going to be 2 real volatility-inducing events during FOMC. The first one is going to be the initial news. The first one is going to be, are we pausing? Are we staying still? Are we hiking? Are we cutting? What are we doing? They announced that. Volatility is going to come in. The second one is going to be Powell. Everyone is watching Powell. This guy right here. Everybody is watching Papa Powell. They want to see, does he sound bullish? Does he sound bearish? Is he saying things about inflation? Does he sound on the same page as last time? Dovish. What's he saying? And so that's going to be the second volatility-inducing event. So first one, news. Second one, Powell. When does the news come out? Right at 2 o'clock. When does Powell start talking? Right at 2:30. So I know that the A move needs to happen between the news and Powell, and the B move needs to happen between the news and Powell to about 5 to 10 minutes into Powell's speech. That is kind of my game plan for FOMC. So next time this comes around, you guys know exactly how I handle this. A move right after the news drops, the announcement. B move right into Powell talking, potentially into the first 5-10 minutes of Powell's speech. C move when Powell is talking, the rest of his speech. Very simple setup. I've played this thing 10 times in the past few years. A lot of the times it pays quite well, like today. Maybe not to the degree, but a lot of times I'm making good money on FOMC. It's one of my favorite days to look to maximize gains like this. I made enough to be done this week trading. I don't have to trade the rest of the week because I nailed this FOMC ABC setup. All right. Let me drink some of my UV blue here. I'm kidding, guys. It's Gatorade. I'm not a high schooler in the football stadium parking lot down in UV blue in the back of my 2001 Toyota Corolla. Okay, what do we have next? See if we have any questions in the chat here. I just want to say thank you all for being here. If you guys can do me a favor and do the thumbs up thing, I'm going to try to get this thing to 200 likes. That's kind of my goal for this video is 200 thumbs up. on this stream here. So if you guys could drop one, that'll kind of help us get ahead of the curve. And then when we get more people watching this, you know, when they get off work or this weekend, hopefully they see this, drop a thumbs up, and we can see 200. So if you can, that would be greatly appreciated. Mercedes says, I was expecting a bigger B move. Sometimes you will get a bigger B move. Sometimes you'll get the B move. Let me delete all this junk I have on here. Sometimes you'll get the B move. Let's get a little path going here. Sometimes you'll get the B move instead of just going to the 9 and dipping. You'll get it all the way back down. And then you get this kind of like consolidation before this thing rips. So yeah, sometimes you'll get it all the way back down to support from before or kind of towards the candle even or where the candle opened right as the news happened. That's a common one we'll get. I didn't think we were going to get that due to the low volume here. And that was my key, was the low volume. If you're going to get a move all the way back down into this support, you're going to need a decent top here. You're going to need a decent bearish rejection up here. And the volume here wasn't telling me that we had the follow through to send it all the way down to this key level. So for me, it was basically just a pullback to the 9, ride that. Higher volume here, and I would have probably waited for something like you were thinking, Mercedes, which would have been a deeper pullback there. Deli Ranks says, hi Teddy, love the content. How do I get into the Discord? If you want to join the Discord, it is in my bio on Twitter. So just click on my profile, and then there's a link tree in there, and you click the link tree, and the top one should be Join Trading Community. That's the easy way of doing it. The trading community is awesome too. Maybe I should plug that for a second. Just talk about how awesome it is. The trading community, we live trade every single morning, 10 a.m. Eastern time. It's great. I talk in there all day long. So I'm in there basically saying, SPY looks like this, SPY looks like this, blah, blah, blah. Tesla looks like this. I have trading journals in there where I basically log my trades. You know, I'm taking a SPY long. I lost this one. I won this one. I'm swinging Tesla. I'm not swinging Tesla. So yeah, if you guys want to join, it's pretty cool. We do camps in there too. Like volume camp will be taking place in there in April. There's a camp up right now from back in November. If you guys want to do that, it's swing trading camp, so you can watch all the videos. They're like this format, where it's on YouTube. It's long, 60 to 90 minute classes. It's up right now. If you guys want to go watch those, they're in the Discord as well. Okay. Any questions here? How much is the Discord? It is $20 a month. I try to keep it pretty cheap here. I don't want to be one of those crazy expensive. Where would your stop loss on the FOMC trade have been? Do you wait for a candle close as well? My stop loss probably would have been if we broke the 9 and closed a candle below it. That probably would have been my stop loss because I had the 9 up. I was really watching it. And also this 584, this key level of 564, not 584, 564. If we broke below that, I would have had a hard stop there for sure. Can you tell us what tickers you generally trade on the lives, and also how many hours a day is the live trading? So typically it's from 10 a.m. Eastern until 11 a.m. to 11:30 a.m. Eastern, so about 60 to 90 minutes. And I usually trade SPY, ES, typically just the market. So I'm watching SPY. I'll have some other names up, like I'll have Tesla up, I'll have Microsoft up, QQQ, Apple, Nvidia. I'll kind of go through those and look at them, but for the most part, all of my trades are going to happen on SPY and ES, because that's what I trade. That's what I've traded for years. Okay, I see Josh in there. Yeah, we had a conversation yesterday about Girl Scout cookies, and I said I'm not a fan of the peanut butter tag-alongs, and there was some hatred in there because of that. There were some people who did not like that one. Josh was one of those people who did not like that comment. I said Thin Mint's superiority and Samoas are the two that I would roll with, and tag-alongs just not my style. So yeah, but I'm glad everyone who's in there enjoys it. It seems like when people come in and they really apply themselves in there, they do enjoy it and they do have a good time. So yeah, I got to keep moving here, though. But if you want to join the Discord, link in the bio. Go click it. Check it out. If you don't like it, that's fine, too. Like, you're not going to hurt my feelings if you join. You're like, this isn't for me. But maybe you'll join and you'll have a cool community that you can trade with. The next thing I want to talk about here is the Bears versus Bulls battle. This is something that you guys will hear me talk about on a lot of my volume price analysis videos. I do a lot of short videos about volume price analysis. I'm constantly kind of posting those 3 2-minute videos. And I also talk a lot about this in volume camp. But I am constantly looking at price from a Bulls and Bears battle perspective. I'm constantly thinking, who's winning this battle? Are they winning it with like a stranglehold? Are they winning it with a complete control? Are they just barely winning? Is it completely 50-50? Are they winning with a lot of orders, a lot of buyers? What's happening here? And I want to go through some kind of specific candles here and some charts that I kind of wrote down. But this is going to be a little bit of volume price analysis. This is kind of my outlook on volume price analysis. This is the thing that I took from volume price analysis that helped me the most after reading the book, was this perspective of the Bears versus Bulls battle that occurs literally the entire time that the market is open. So every single moment of SPY, so every single moment on this chart, there is a Bull versus Bear battle occurring. We're constantly seeing Bulls push, Bulls buy, Bears sell, Bears try to reject. And the key is going to be the outcome. It's like, imagine, I always talk about this in my Discord during lives too. Imagine you're watching a war. And imagine you're watching from above. So like, we're looking eagle eye. And the Bulls are over here and the Bears are over here. And they're fighting, they're skirmishing, they're doing whatever, shooting each other. Pew, 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 whatever. Spears come out, they're jabbing each other. Ooh, that looked weird. But, you know, they're kind of pushing each other. And then we get a chance to just see the end of the battle. Who's left standing, one side or the other side? That's what a candle is. That's what every single candle is. You're getting buying, you're getting selling, and then you get to see who won by the end. Who left standing? Who is still there after the candle is closed? Who was victorious in that battle? Every single candle is a single battle. And when you see all of these single battles together, it starts to give you an idea of right now, who is the stronger side of the war? Who has better soldiers? Who has better technology? Whatever it is. And yeah, so that's kind of something that I'm going to talk a lot about during the camp. But I do want to give you kind of just a little bit of a taste of that today. The first chart that I have here that I want to talk about is the AMD Daily. And this is going to give you guys a good idea of kind of what I'm looking at when I'm looking at this Bull versus Bear battle. And a lot of times I'll do these on the 5-minute chart. So a lot of times I'll talk about these more on the 5-minute chart. But today I have a couple dailies. So I want to kind of go back here to when this thing topped. This is all-time highs back in 2024. And when this thing topped, there was a really, really strong run-up before. So there was this constant pressure from bulls. They were constantly buying this up. You can see this candle right here. Crazy high volume, nice, strong, bullish candle all the way down here on the left. We see some more here. We see this very high volume, green candle, strong green candle. We see 2 more here, high volume down here. Strong green candles. We see some more during this rally. We see some during this consolidation. We see another leg up here. But then what I want to bring your guys' attention to is this candle up here at the top. This red candle up here. High volume. The highest volume in quite a few candles. What did the battle look like that took place to really cause that candle to form? We can zoom in on it. Let's zoom in on it so I can walk you guys through this. What happened at the beginning of this candle was the bulls looked like they were about to just completely wipe out the bears, which would have been consistent with what we'd seen. I just showed you all these candles on the run-up, on the breakouts. It would have been consistent with what we'd seen. No one would have been surprised if another crazy green candle closed. But what happened next? the bears figured it out. They said, no, no, no. Line in the sand. We're not getting our ass kicked again. And then they did the ass kicking. Come from behind victory on this candle. They got pushed up. The first half, it wasn't looking very good. They came back. And what did the battle end like? It ended with the bears emerging victorious with a ton of volume. So this was a very important candle. That's what these high volume candles tell us, is that there's a very significant battle occurring there. Tons of action there. Lots of interest from bulls and bears. But like I said earlier, guys, the final outcome is really, really important here. And in this example, the bears were victorious. The bears were able to completely stuff the bulls' move, the bulls' attack, and the bears were able to launch their counterattack. Closed this red, closed it with a decent red body, with a very, very large upper wick, and high volume. So that's one example of the bull versus bears battle. And then you guys can see what happens after that. That was a key tipping point where after that, the bears had control. Right here, you can see we moved into this high volume bearish candle, very large body on it. We got more of them here. And so this was what I call a flip of control right now. So we had the bulls completely running the tables. We had this very significant candle where the bears finally figured it out and were able to stuff price. And then we flipped control. The bears got control after this candle. So bulls, control flip, bears had control. And you can see the volume here, guys. This right here. Think about it from that war perspective again. What is this candle? A complete annihilation. The bears ran up on the bulls, and the bulls didn't have anything to push back. It's like if the bears had 10,000 soldiers and the bulls had 50. And they just basically, they don't even have to shoot them with guns. They can just trample them. They can just fucking stomp them out. They can just run over top of them. That's what happened on this candle here. It wasn't even a battle like it was up here. It was just an annihilation. These down here, annihilations. Pretty big one there too. Another big one there. And then we start to see what's happening here. Oh, the bulls are trying again. The bulls are giving it a shot. And then the bears just show again that they can annihilate them. And that's kind of the name of the game here. And where I'm going with this is we're starting to see another possible volume flip here. Control flip here. We're starting to see signs of it. I want to show you guys a few of these candles here. So we had, again, more signs that the bears were basically just wiping the floor with the bulls. One here. One here. One here, another one here. So the last 4, 5, 6, 7 volume surges have been the bears winning that battle. But what have the last few been? The bulls have finally been figuring their shit out. The bulls have finally been pushing back on that battleground. Like I said, we got the bulls and the bears. Lately, it's been, wham, this dude's, done. Now it's more of a little bit of fight back and forth. A little bit of fight back and forth. They're going to win one battle. They're going to win one battle, which is very different than what we've been seeing. And this is what I want you guys to kind of get in your head is you have to have this overarching idea of who's in control, who's winning, who has more strength right now, and be able to tell when that is changing. And so, like I said, we had that pivot point where it pivoted up here. Since then, bears have been in control. That was all the way back in 2024, March. That's a year ago. Bears have been in control since then. But I'm telling you, we're starting to see those signs that the war is not so easy for the bears. The bears were having an easy, just molly-whopping war back here. Back in 2024, even in early 2025. February 2025, what do we see? We see the bulls stepping up. We see the bulls finally fighting back. March 4th, 2025, what do we see? We see lows get touched and we see bulls finally fighting back with the highest volume since the previous bullish spike. So this battle is always happening. They're always waging war on each other. And you have to be able to see it with a larger lens. You have to be able to see it and say, okay, I'm seeing the bulls take advantage of this. I'm seeing bullish strength. Or I'm seeing bearish strength. Or I'm not seeing either right now. This is kind of a battle zone. Whoever wins this is going to be important. That's what we need to be looking at. I do have a second example here. It is the Reddit daily, which I've talked quite a bit about. But I want to talk about this rally that Reddit had at the end of 2024 and the beginning of 2025. So we see this crazy gap up here. And after the gap up, what happens, guys? I'm going to kind of zoom in here. After this crazy gap up, what happens? Think of it from that battle perspective again. The bulls wiped the floor with them. High volume, bulls completely crushed them. Let's go to the next volume surge. Bulls completely crushed them. Let's go to the next one. Bears kind of have a little bit of success, but it's kind of a doji candle there. Next one. Bulls wipe the floor with them. Next one. Bulls wipe the floor with them. Look at these candles. Look at the size of them. Large body, decent volume surges, bullish success. Look at the next one, guys. This is the important one. Highest volume since all the way back here in 2024, and how much bullish success happened? Almost none. Almost none. This is that volume price analysis I was talking about. Back here, the bullish success was very, very large every time that they used a lot of volume. So let's go back to the war. Every single time that the bulls tried, deployed a lot of troops, they knocked them over without even resistance. Look back here. Crazy candle. Large candle here. Large candle here. Large candle here. Large candle here. Every time a lot of soldiers were on the bullish side, they ran them over. Fast forward to February 13th, 2025, they do the same thing. They deploy a lot of soldiers, and now they're hitting them, and they're not knocking them over. They're not running them over. What does that tell us? That tells us the bears are not as weak as they used to be. The bears are stronger than we previously thought, or they previously were. The bears' army is having a little bit of success. The bears' army is surviving. And that battle is always happening, guys. I just want you to see what happened afterwards. I've been bearish on Reddit since somewhere in this top, and that was one of the main reasons, was the lack of success on this high volume candle. They continued lower, they consolidated, they continued lower, high volume on the selling side of things. It just kind of validated that that was a correct assumption up here. I just want to reiterate this with you guys. The bulls and bears are always fighting. It's our job to determine which side has the advantage right now and when that flips. That's going to be something I talk about a ton in Volume Camp. It's one of the best things that volume price analysis gave me, is the ability to look at the market from a battle perspective between those bulls and bears and then determine when it's flipping, because those are the best reversals. Those are the ones that I always catch that always pay me the most, are when I find the sentiment's been very bullish and I'm starting to see that weakening. Okay, guys, that's going to conclude my little bulls versus bears rant. I hope that was helpful. Yeah, I hope that was something that you guys can use and kind of maybe look forward to Volume Camp for, because like I talked about on Twitter, my Volume Camp is going to be hour-long segments of that type of talk. And I just talked for, 15 minutes. It's going to be hours of talking like that. So it's going to get a lot deeper and it's going to be a lot better. We do want to get into the current market. So SPY. What is SPY doing? What do I think is SPY going to do in the future? I'm going to pull up the SPY daily. And then I do want to play what I said last week. I do want to kind of just, I got it pulled up on my phone here. And I'm going to just play it into the mic. And you guys will be able to listen to what I said last week about SPY, and then I'm going to analyze that and see if I feel the same, see if I feel differently. Spoiler, I already know, but I'm going to share it with you guys here. So let me play this. You guys can listen. I think it's only a couple minutes long. And then I'll be getting into what I think about SPY. And then I'll have some individual stocks I like. So a few things. I think I have 3 of them. One of them is PLTR, one of them is Crocs, and one of them is Intel. And not all are bullish. So you can't assume I'm bullish on them all. I'm going to give you guys those analysis after this SPY one. All right. Like the video, guys. Thumbs up. And this is what I said about SPY last week. Hopefully you guys can hear it.
I talked last week. I planted my stake. I am sticking to my guns. 550 is the buy spot for me. 550 is the buy spot. I'm still sticking with it, guys. I am 100% sticking to my guns with that 550 analysis. Last week I said 550 was 10% from highs. I think that's the place to be a buyer. 580, I think it's like 581 or 582, is 5% from highs. And I'll just be 100% candid with you guys. I had a pile of cash sitting. I had a pile of cash that was sitting not in a trading account. It was a large pile of cash. I transferred it yesterday to my long-term account and began buying yesterday. So take that for what you will. Price was right around 560, below 560. I was buying. I am a buyer at this price. I have a few pieces of evidence that in my brain, work out. Number one being when the market does dip, it does kind of bottom between 5 and 10% historically. Number two, this has been partially manufactured by President Trump. All of the uncertainty from tariffs. I think he knows exactly what he's doing, and I think he knows exactly how to fix what he's doing. I've also, number three, seen the panic reach the common population, the public, in the last few days. I'm not sure how familiar you guys are with that, but when we start to see news stations inducing fear-mongering, whatever you want to call it, a lot of times that's when the move stops. I was getting questions about buying NVIDIA last year. NVIDIA topped last year. We haven't seen highs again. Now, I've gotten 2 calls, 2 different calls, both from people who know that I'm involved with the stock market, who aren't very involved with the stock market themselves. Both of them were talking about how they're going to call their financial people and tell them to liquidate or begin selling this week because they think it's about to get a lot worse based on what? All they've seen on the news, all they've heard through the grapevine from so and so and so. I think we're reaching a panicky moment. I think we're reaching a buy moment. I think we're getting down to that 10% from highs. So like I said, I'm sticking to my guns. I don't just say shit just to say shit, guys. I had cash. I deposited it yesterday. It's live. I started buying, and I'm going to continue buying. If it goes below 550, I'm not gonna buy it all at 550, guys. I'm not gonna completely just exhaust all of my cash at 550. I'll leave some to buy down to 530, something like that, 530 to 520 in that area. But I have begun to deploy that cash. I do think we're gonna find.
All right, I don't want to waste any more time on that. But the first thing I'm gonna do here is put a little black line at 550 because I said 550 is my spot in the sand. Sorry, let me get this drawn here first. 550 was my I like this. Look at the fucking bottom there, guys. I'm not saying this is the bottom for the entire, this is going to reverse, but we moved a good $22 off of that bottom. I'm pretty proud of that. I don't want to get too lucky or anything like that, but I'm pretty proud of the fact that 550 ended up being the bottom. That's also 10% from highs. So I'm going to stick with the guns there of that being a good buy level. I did buy last Thursday when we touched 550. So this stream was Wednesday, the one that I just played. So this red candle was the last candle that I had there. This was the chart. If I just go all the way over, this was the chart There wasn't this little, let me get it fully. Boom, that was the chart last Wednesday during the stream. Last Thursday, we dropped to 550. Strong red candle, large body. I looked it right in the eyes and we played chicken. I said, fuck it, I'm buying. I'm trusting my analysis. My analysis has not failed me in the past. I'm buying at 550. I added some, and SPY ran 20 bucks from there. I have a couple stories, a little storytelling time, and then I'll tell you guys if I'm still buying, what I'm waiting for, how I feel right now. The first story I have, though, got a call late last week, from my mom. She said, oh, I know this lady, her parents just died and she inherited an entire farm. She liquidated the farm and she put all of the money into the stock market. I said, oh, when did her buys go through? She said, oh, back in December. So I looked at SPY. Price was we started December right about 605, and then we ended December right about 580. So she bought somewhere between 580 and 605. And my mom said she's panicking, thinks it's over, is scared, wants to sell the entire thing. And I asked her, does she have a fucking financial advisor? Was my first question, because I'm like, if it's that much money, first off, do you have a financial advisor? Because you should not be managing your own damn money if you're getting that emotional. The second thing I said is, do not panic if you have more money to buy with. If you YOLO'd the whole fucking thing in December, you might have problems. You might have a problem there for the short term. But if you have cash to deploy, what are we doing not deploying it? You go to the store, something's on sale. Are you not going to buy it? Are you going to get mad and get scared? That's not actually what I said on the phone. What I told her exactly was, tell her not to overreact, not to panic sell, and not to let her emotions impact her decision making with this amount of money. My mom didn't know if she had any more money to deploy, blah, blah, blah. But my message is the same for everyone who's thinking about, is this going to go lower? Do not make any decisions rooted in emotion. Do not make any decisions rooted in panic. Do not make any decisions that you are not making with a clear mind. Second thing that happened, got a call from my wife. I'm working, blah, 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 talking on my stream. Mayonnaise belongs on sandwiches. Potato salad is awesome, blah, blah, blah. That's what I was saying during my stream. Get a call, pick it up. Hey, my friend just, she works in the insurance industry or whatever. She just asked me if you think she should sell her stocks that she holds long term with some retirement, something. My wife didn't know exactly what it was. I didn't press the issue. Should she sell? And I said, okay, when did she buy? Because that's my question every single time. When did these people buy? That's how I found out in December. She bought 5 years ago. I said, no. What are you doing? What are we thinking? Why would we be selling right now? If you bought 5 years ago and it's like your retirement, you've just been going in. Why would we stop doing that when price goes down? Why would we stop dollar cost averaging in when price is lower? If you were dollar cost averaging in when things are going up, why are you stopping when price is going down? I'm going to get in trouble. My wife is going to yell at me for being so loud. But why? Why would we stop dollar cost averaging in when price goes lower? It doesn't make any sense. It's all emotional. People are panicking. It's all emotional. It's reaching the mainstream news. You're hearing, Trump tariffs is so awful for the market uncertainty. And people are thinking, wow, I should stop dollar cost averaging into my long-term account when price is dipping. They were fine buying it at 610. They were fine buying it at all-time highs. But now all of a sudden, 10% lower, they're not fine buying it. Do you see how that doesn't make any sense? But again, on the phone, I was real nice. I was just like, no, tell her not to panic. Tell her to just continue dollar averaging in every month as usual. I said it so professionally. I said it so nicely. You guys would have been so proud of me. I didn't even give her the whole, what the fuck are you thinking? Not dollar cost averaging in when price is lower? But being comfortable doing it when it's higher doesn't make any sense. Doesn't make any sense. Doesn't make a bit of sense to me. But that's what we're dealing with, guys. Those are the people that we're dealing with that are panicking. Those are the people who are going to sell their shares to smart money. And if we're smart, we can take advantage of that. There's a lot of that happening right now. I just saw Mickey's comment, buy high, sell low, baby. That's exactly what they're trying to do. That's exactly what the stupid fish are trying to do. I have to do the fish analogy, guys. I have to do the fish analogy. Last week I thought about this afterwards. The people who are seeing all this news on whatever it is, financial news stations or even their normal news stations, are like the fish that gets stocked into the pond. The truck comes and they dump all these stock fish right into the pond. They drop some big ones in there too. Some big ones, just like the lady who sold her farm and put it all into the market. They put in some little ones, just like my wife's friend, who's pretty young, just dollar cost averaging in. They put in some medium fish. There's a lot of fish that are getting stocked into the pond. What happens when the stock truck comes? Do we have any avid fishermen here? I've done quite a bit of fishing. I lived by a pond, blah, blah, blah. What happens when the stock truck comes? All the fishermen come around. Do you know why? Because those fish are dumber than a rock. You can almost not bait your hook. You can almost put a bobber in the water with a hook, and they'll be like, what's this thing? What's this little thing? Bite the shit out of it. Whoop, they're out of the water. Done. Short life in the pond, buddy. That's what we're dealing with. Those are the types of people who this news is hitting and inducing that panic. The stockfish. The dumber than a rockfish. The fish who will bite a hook with no worm on it. You don't even have to conceal the hook. They might even just run into it head on. You know, the hook might just be hanging in the water, and the lady who liquidated her farm might just boink right into the hook. Who knows? That's what we're dealing with. Those are the people who are seeing the news and panicking. So we're not going to be those stockfish. We're not going to fall for the hooks. We're not going to run into the hooks. We're going to look around and say, there's a fucking hook. I'm not biting that. All right, those are my two stories. There's my fish analogy for the stream as well. But basically, guys, the SPY daily here, I'm going to get into the analysis now, the technical analysis. I'm still feeling bullish. I'm still feeling like a bounce. We've already gotten a small bounce. I'm still liking this from a bullish perspective. I would like to see one more dip down near that 550 level, though. Just going to be completely honest with you guys. I would like to deploy some more cash, probably below 560. I'll put a line there. This is 560. Below that line, I would like to start deploying cash. If it wants to go lower than 550, like I said last time, I'm okay with that too. I would keep enough cash for a move down to about 530, but I am liking the possibility for 550 being the bottom and us moving back into this 580s territory. So I'm kind of geared up for both ways. I did deploy some cash on 550, but I'm also prepared if it wants to see 550 and a little bit lower again. I'm still bullish. I'm still sticking with my guns. That SPY is going to bounce. It's not going to go down and break 500. I'm seeing that all over Twitter. SPY 400, SPY 450 inbound. I'm not seeing anything that lines up with that. What I'm seeing here, and I'll kind of explain why I'm not seeing anything that lines up. What I'm seeing here is a lot of uncertainty due to the tariffs, like I said in that video, a multiple topping, which happened in here, this setup, multiple tops in this, probably about 607 up to 613, and then a warranted sell-off. Tariffs, the multiple top, this was a warranted sell-off. Everything looked good about this. There was a reason behind the sell-off. But then what happened when we got down towards these lows? Volume declined into these lows. We can put a little arrow. we did not get any strength into these lows. We actually got declining volume, less strength. We had a strong candle here, Monday, March 10th. We had a strong bearish candle. It wasn't great, but it was bearish, March 4th. But then March 11th, 12th, and 13th, lower volume here. That's key. That's going to be key here, guys. Bears are not getting any stronger down here. There's not more selling. There's less selling. Into that 550, which is 10% from highs, which is a level that I had marked out. And now we bounced $20. The next thing I need to see for me to finally kind of like nail in the coffin, I'm 100% a bull. I'm adding swings as well, because right now my 550 ads are more long-term investments. For me to get comfortable adding swings again and saying in the short to medium term, I'm thinking we head back to 600, 610 all-time highs. I need to see a bullish volume surge. Give me an indication that bulls are starting to win the battles. There's a daily battle that goes on. We just talked about it. Give me a day where after the battle happens, the bulls are standing and the bears are not. That's what I want to see next. If I see that, 100% I will be bullish short and medium term. All right, so just to reiterate, I'm still bullish. I'm sticking to my guns. 550 is the spot. I'm a buyer below 560. Saving a little bit of cash if it wants to dip below. Stop out some people below 550. The next thing I need to see from a bullish perspective is a volume surge, a higher volume candle where the bulls successfully end the day with a strong candle plus high volume. That's it. Very, very simple. I'm going to move into Bitcoin now. So the Bitcoin daily, I wanted to bring this up because I've been bearish on Bitcoin. I haven't liked Bitcoin recently. I was bearish when it was up here near 95K. The line in the sand on Bitcoin is very, very clear. It's this 90K to about 92, 93K. And we tested this back in March, beginning of March. We broke it, and then we came up, tested it, rejected it. We had a good candle today, actually, on Bitcoin here. Decent little volume. It's not high volume, but a strong green candle. I'm not going to be bullish on Bitcoin until it gets above this zone. And the zone is very simple. It's just 90K to 93. Above that, okay, now I think we're headed up towards 110. But below that, I still think we can refresh 70K. Come up here, reject it once more. 70K comes after that. Or we get through it and 110 comes. So if you're into crypto, that's my technical analysis on Bitcoin. It's very simple. It just revolves around that one key zone. That one key zone, which is going to be a crazy battleground here. Expect a ton of volume. The last time we saw it, the last two times we saw it, insane moves. The first one, we got up to about 94, and then this thing sold all the way down to 86 within one day. The second time, we touched it, barely touched it, 91K, and then 1, 2, 3, 4 days later, this thing was 77K. So strong moves on Bitcoin here off of 92K every single time. That's my line in the sand. I'm not going to be bullish on this until we get above that. So I'm bearish on Bitcoin right now. All right. Now we're going to get into the individual stocks that I like. So what stocks am I, liking for the short term, medium term, or potentially just like a few days of momentum? I have 3 of them. I told you what they were: PLTR, Crocs, and Intel. First, though, let's talk about Groupon, baby. Last week, I gave you guys Groupon as a potential squeeze target, high short percentage. I gave it to you Wednesday night. Wednesday's candle closed below $14. Today we touched 17. 20%. 1, 2, 3, 4, 5 days. I don't know what else I can give you guys. Last time I gave you Reddit short, the time before that I gave you Reddit short. Last time I gave you Groupon, told you it was going to squeeze. it squeezed from below 14 all the way to 17 bucks. I hope some of you guys, I hope at least one of you guys in here took Groupon. I didn't take Groupon myself, but I hope one of you guys saw the video, watched this, saw Groupon, and decided to take a long on it because that thing was primed. Short percentage was high, the crazy move, the crazy follow through from bulls. Again, we can talk about it from a bull versus bear perspective here. Crazy gap up last Wednesday, and then what happened after the gap up? They basically just obliterated them. That battle again, the bulls and the bears, the bulls just fucking hammered them, and it was a steamroll, and the bulls were left standing. Crazy bullish candle, strong body, high volume. It was pretty easy. So Groupon, slam dunk from last week. Let's get into the 3 charts that I'm going to do this week. First one, PLTR. Here's the daily chart here. The reason that I like this all revolves around volume profile. So let's get volume profile up in here. So PLTR has been on basically a historic run. I mean, back in, when was this? Back in 2024, this thing was sitting around $20. It got below $20. And earlier this year in 2025, this thing topped at about $125. So gained over $100 per share in such a short period of time. Pretty insane move. It's recently dipped quite a bit. So 125, and it recently came all the way down to $75 per share. The reason that I like the current action is that it's holding this previous resistance and this volume shelf here. This crazy volume shelf here around 75 all the way up to 85. It's the largest shelf on my current volume profile. It's holding it, and it's actually starting to kind of creep towards the top of it. It also coincides with this resistance I was talking about earlier, this consolidation area I was talking about, where we had from December of 2024 until February of 2025, we just kind of hung out in this zone. We can just kind of put a zone here too. So we kind of just hung out in this zone. We got a little lower, but then we got back up into it. And that kind of correlates exactly with this volume shelf, this VPOC area. We're holding it, and we're starting to creep above. In my opinion, this is a pretty bearish sign. Bullish, sorry. Not bearish, bullish. Above this level, we don't have much until $100 and then $115. It's currently $86. So $100, that's a decent gainer. $115, that's a decent gainer. I think that this has a bullish move, a rally in it over the next couple weeks. The next one I have here is Crocs. Disclaimer, this has actually been my stock of the week. I'm not sure how many of you guys are familiar with stock of the week, but in my Discord and for all the people who subscribe to me on Twitter, I post stock of the week, which is just a 3, 4, 5 minute video where I analyze a chart and I swing that chart. I'm basically buying the next day. I post it on Sundays, and then usually I'm buying on Monday or Tuesday. And Crocs was one that I posted a couple weeks ago. I got an average about $101 on this, and right now it's about 107, so I'm up about 5% on my shares on Crocs. But the main reason that I like this is this zone here. We had a very key zone, and lately the bulls have been winning the battle on this key zone. So back in March 7th, we got a crazy move to the downside to start the day, which, like we talked earlier, it means that the bears were winning the battle to begin, and then the bulls came back, dropped a ton of troops, whatever you want to call it, deployed a lot of troops, won that candle, closed it green, and then we've just recently seen another bullish bounce off of that support level. The support level comes from November and then again in January. And what do we have above? We have a crazy gap over here. If we can get above 115, we have room to about 130. Right now it's 106. Next resistance is going to be about 111. So it's going to be 111, 115, and then 130 are going to be the key levels in the future. I really like Crocs as a company. I mean, I see a ton of people wearing Crocs. Sport mode, baby, sprinting around. They got ones with like snowshoes in them, shovels and stuff. People love Crocs. They're comfortable. They also bought that Hey Dude company, which I hate how those things look, but they bought those. I mean, I hate how Crocs look too, but they're comfy. They work. People love them. They seem to be doing all right. They're making a decent amount of money. So yeah, everything's lining up for Crocs here. It's holding this key level, has that gap above. Like I said, 111, 115, 130 on Crocs. Okay, last one here is Intel. Whoa, not Intel. It's INTC. I always think this is INTL ticker. I said I wasn't going to be bullish on all of them, guys, so prepare yourselves for a bearish opinion here. I said, not all of them are going to be bullish earlier, so you had to stick around. Intel is the one that I am bearish on. We obviously have quite a clear range here where the lower side, kind of messed this zone up here. Let me get it a little bit better. There we go. The lower side is this zone here, starts back here, goes all the way. We just bounced off of it on March 11th. And then the upper side, pretty clearly, kind of in this area maybe. That's probably a better zone. The upper side, we just rejected this week. I think we're headed back down towards the lower side. I'm saying it softly in case we have any Intel holders in here. I'm not sure if you guys saw that guy who put all of his life savings into Intel on this day right here. His grandma, this was on Wall Street Bets, I think. Let me pull this over so you guys can see it. He put I can't remember if it was $800,000. His grandma died, left him $800,000 or something, and he put all of it into Intel on one of these days here, right before this earnings report dropped it from $30 all the way to $20 fucking a share. Imagine doing that. You get $800K. You're like, oh, I'm going to make this decision. It's going to be a good one for me. And then all of a sudden you have $500K. It's just bam, immediate $500K. You just lost $300,000. And he wasn't well off. He was a college kid or something, or right out of college. Lost $300,000 immediately. Just immediately. Anyways, but yeah, I'm bearish on Intel here. Couple reasons. The range is held strong. Number two, I don't believe in Intel as a company. I think AMD is sneaking in, taking a lot of their money-making opportunities, and I think they're behind on the tech side of things too. So I don't believe in Intel as a company. And one of the reasons Intel popped so crazy the last couple weeks, so we were $20 and then we basically ran all the way to 26. One of the reasons was a new CEO. To me, that doesn't do it. That doesn't cut it for me. I'm not feeling okay, turnaround time. Nope. I'm going to need to see some real concrete evidence that the turnaround is occurring, that the technology advancements are being taken seriously now, because Intel's been stuck in the mud. Intel has had their feet with concrete blocks on them. They haven't wanted to evolve for anything. The new CEO probably going to do stuff. I don't know what those things are. I don't know how successful they're going to be. And I don't know if that's going to translate to dollar bills. And that's the bottom line, guys. That's something we need to talk about a bit. I don't have a lot of time left, but I do kind of want to just bring this up. We need to see money being made from decisions. If you're going to long some news, if you're going to say this company is completely turning around, we have to see money being made by those decisions. Or else the news doesn't mean shit. Or else the press release, all the wazoo about, oh, new CEO this, new CEO that, new this, new that, we're making these changes, AI this, AI that, does not mean shit unless it makes money. Dollar bills, money, cash in the pocket of the company. That's the news that matters. I feel myself gearing for a rant, and I'm going to cut it off, and maybe we can talk about it next week. Money has to be made. I can get into that. I'm a real fundamental guy when it comes to trading. I do a lot of fundamental analysis. I know a lot about valuation trackers and, price to cash, all those sorts of jazzy things. I like talking about that sort of stuff. Maybe we can have a little section about that one of these weeks, but we don't have time for it today. Bottom line is, I don't think Intel's news makes them pop above 26 and go all the way back to 30 or even really hold above $22. I think they're going to head right back down to $20 and possibly even all-time lows, in my opinion, on Intel. So we'll come back next week, see how PLTR does, see how Crocs does, and see how Intel does as well. Last thing before we go, guys, a couple little things. Number one, don't be a stockfish. Don't be a stockfish who is buying high and selling low. The name of this stream is called Buy High, Sell Low, but we got to take advantage of the people who are buying high and selling low. So don't be a stockfish. Be one of those smart fish, and then eventually turn into one of those fishermen who shows up when the stockfish truck shows up. See that stockfish truck going down the gravel road and hop in your truck and follow it, because you know you're about to catch some stupid fish. And I think that's exactly what we're doing with SPY. I think SPY, a lot of stockfish making stupid decisions. I'm going to pull this chart up again here. Here's that chart. Lots of stockfish are making very stupid decisions due to the uncertainty with Trump's market, the tariffs, all the things that are going on. Be one of the fishermen who catches those stockfish. Don't be dumb. Don't be biting hooks. Don't be taking bait. Don't be making emotional decisions in the current market. All right, guys. That is all for today. I think what I'm going to do is I'm going to end this with those two John Carter little quotes that I had earlier, because I think that they're just perfect. They're a perfect way to end a stream like this where I talk a lot about trader psychology, which I hope helps, by the way, guys. I hope you guys enjoy the trader psychology talk as much as you enjoy the analysis on SPY and the charts and stuff. I know that stuff is fun, but the trader psychology is really what's going to help you guys make money for yourself rather than relying on other people to make money. So the first one here is be tenacious in learning how to become a better trader, not in proving that you are right on this current trade. You have to be able to see past this current trade and see that your system, your growth as a trader is more important than proving yourself right on this current trade. Building yourself up, learning the lessons that the market is teaching you, because the market speaks. The market teaches lessons. You have to listen. You have to take those lessons and apply them to yourself. So be tenacious in learning how to become a better trader, not in proving that you are right on this current trade. Such an awesome trading quote for everyone who's not profitable. If you're listening to this and you are an unprofitable trader, write that down. Write it on a sticky note. Stick it on your fucking screen, phone, iPad, whatever you trade on. That is a perfect quote. You have to be able to admit when you're wrong. You have to be able to stop out of a trade and not let your ego keep you in something longer than you should be. The second quote here: the game changed for me when I committed to becoming a better trader on each and every trade, as opposed to rationalizing why I was right on every trade. Similar to that first one. Just a little bit different. We tweaked it just a bit. Look at your trades deeper than just technical analysis. Why was I right? Why was I wrong? Deeper than that. What caused me to make this decision? What caused me to stop out at this current level? Was that rooted in emotion? Was that rooted in fear? Was that rooted in panic? Was I being a stockfish? Was I being the person who's willing to dollar cost average in at highs, but then not when things dip? Was I making irrational decisions due to emotion? You have to be able to confront all the decisions that you made, all the emotions, all the logic, everything behind those decisions. You have to commit to understanding from an unbiased lens why you made those decisions, and were they right? Were they wrong? And most importantly, should you make them in the future? Or should you change your mindset and make sure that you don't make those bad decisions again? Should you tweak your mindset? Should you become more aware of emotions in the future? That's when you're going to start to find success. That's when you're going to start to grow. Confronting yourself, confronting your process, confronting your bad decisions, confronting the emotions that the market makes you feel, because they're going to be different for every trader. Some of you are going to feel panic. Some of you are going to feel the need to double down. Some of you are going to feel FOMO. There's going to be a ton of things. Some of you guys are going to feel anger. Some of you guys are going to just feel completely dead inside. There's going to be so many different emotions. Confront that. Figure out what caused that and work on moving past it. Don't try to rationalize. Don't try to, oh, I was right, this happened. Oh, I knew this was going to happen. I just, next time I'll get it right. Oh, blah, 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 this, blah, 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 that. Rationalize this, rationalize that. Don't do that. Confront what happened, be unbiased, and work through the obstacle. That's it, guys. That is buy high, sell low. Thank you all for being here. Don't forget to drop a thumbs up. I appreciate every single one of you guys. And don't be the idiot who is buying high and selling low.